And we're back. What's up, Mr. G? How are you?
What's up, Fuzzy Guzzy? I'm good. It's been a while.
It's been a while.
It's been a minute since the last episode.
Yeah, man. Remember you said you just got to keep posting. And that's
Yeah.
exactly what we did.
And if you get to 20, I'm telling you, if you get to 20 podcasts, that's like 90 better. That's more than 99% of people that start. So
we're at 3.
Here we go. Well, not yet. We will be after today.
We will be.
But
well, it's live, so no matter what, this is 3.
Okay. All right. So today's topic, something I want to discuss, is something that I've been thinking about for a few weeks, and I asked you about it in the Instagram chat, but I don't think you saw my message. But I was talking about it with Tarun actually briefly, and it's something that you mentioned to me kind of recently, and then Drew mentioned to me a couple of years ago, 2 or 3 years ago, and that was options trading.
Okay.
So that is the topic. So you had no idea that was a topic that I was going to bring up.
Yeah.
But I think it'd be interesting to talk about because I've been looking into it a little bit over the past few weeks.
Yeah.
Just to try to, first of all, to try to understand it, understand what's going on, because I know that the millennial money guys were talking about it for a while, or at least like Andre Jick or Graham, I think, or maybe it was just Kevin, that they were doing like covered calls and stuff like that, print money. But I think, and then you might not have realized it, but me and Tarun were talking about it at Tracy's birthday also, and he was telling me what he does and like his goal each day, and he was saying that you do something different, or you're like interested. Maybe it's a different industry that you're interested in or something. But I guess, because I think we should probably assume that anyone watching this might be like an absolute, and I'm like not that far away from absolute beginner.
Yeah.
Maybe going over first, like what is an options contract and like how it differs from a stock. And then maybe we'll go into like details about, maybe how you even started learning, what resources and stuff like that.
Well, yeah, it's funny that they bring this topic up.
Why is it funny?
Just because it's something that I'm still learning, and I've actually today part of my I'm really breaking down more things. I'm trying to be more organized and like little goals, and so I'm writing because I've been, just not to get too far off topic, but I've been more, I guess, humbled this year. And I think that just being more organized is be more accountable. But literally today it was just study more the relationship between the VIX and options was part of my thing, on my thing. And I did today. So I actually was watching several videos about volatility, implied volatility, and options trading. What I think the most basic way to understand options, it's a contract against the underlying security, right? So it's a derivative contract of an underlying security. So say if you have Apple stock, it's a bet, or it's basically a bet that you think it's going to go up or down, or not go up or down if you're selling the contract. And you can exercise the option. So say if you buy, if Apple's trading at 100 and you think it's going to go up to 110, your premium, the price that you pay for the contract, right? So say someone's like, okay, I'll sell you that for $1, right? So it's at 100, it's going to go to 110, and your premium's $1. And you have a certain amount of time that say it's January 1st, and now you brought the option for the February 1st. So you have 1 month. Your break-even price is $111. It's the strike price plus the premium. Anything above that, really, you're every dollar that goes up, basically because you paid it for $1, you're basically gonna double your profits. So
So the idea there, I think you're describing a call option, right? Where I'm hoping that I will have the option to buy, let's say, use Apple. I think Apple at it's currently
You say
$100
it's
and
$100, and you want the option to buy it
at
the
110
a 110, and
because I think it's
paid a dollar.
going to like 200, but I want to have
Yeah,
the option to buy it at 110.
yeah.
So if a
So
month
so if it
later,
goes to so basically if it goes to 200, you have that $90 difference that you're going to pocket, right?
Yeah.
The strike price plus that, and then minus, so it'd be $89 difference that you're going to basically pocket times 100, because every option is 100 of the underlying stock. So
and we could just keep it at that, like maybe just to keep it simple, just that what we just described as a call option.
yeah,
And I think that's just enough to start with. That's like kind of like where I'm at
yeah,
with understanding that. And I do understand, I think I understand a little bit about covered calls.
yeah. So basically on every options, it's like any contract. You have two sides, right? So you have the buyer, which would be the person, hoping to go up or down, and then you have the writer or seller of the option. And basically what they're saying with covered calls, right? It's like a call when somebody exercises the option. Say if you write an option and the person, I guess, wins that bet, and it goes into the money, right? So Apple is at 100, you sell them the 110, now it's at 114. They exercise the option, right? You basically have to give them that stock, right? You have to sell them that stock at 110, even though it's at 114.
Yeah.
And so you have to either own the stock in order to hand it over or pay. So like when you have a covered call, that means you own that underlying stock. So in case it does get exercised, you have the actual stock. If it's a naked, if you're writing naked calls or whatever, then you're just kind of like totally risking everything, because then you have to
buy it and sell it.
You actually have to lay out the capital afterwards, whatever. Yeah. And if you don't have whatever, then you could get pretty screwed.
So how did you like get into this at all?
And it's just one of those, like anything. You just kind of like anything I do, I just kind of go in blindly and then slowly learn as my money burns away.
Was there something that attracted you to it? Because
no, I think and
because I always think of I always think of like the like how, like poker, for example. I feel like I have heard of a lot of poker players that have gone into like the investing world and like talk about options and stuff.
Yeah, because so, I mean, you think about it, it's the same principles, right? It's a lot of the same principles of understanding risk, looking at data and saying, what's I guess you're not a big technical analyst fan, but it's just prior data and kind of understanding what the risk reward to whatever direction is, and then choosing the right strategy or option. If it's a covered to buy a call, or to buy a put, or a covered call, or whatever, sell a covered call, and then bankroll management and things like that, and then it's rinse and repeat. So it's really that's why I think a lot of people in the poker world and the crypto world, they kind of overlap.
Yeah,
it really is just looking at data. How do you parse out what you think is going to happen, and then implement it. So, but again, it is because it's what's the word I'm looking for? Like an asymmetric, is that the right word? Like it's not really like a 1-to-1 bet, right? It's not like it's like you putting one to like get like 100. It is more. It definitely requires more attention and more. It's not like just buying the stock and because there's more volatility, right? So the volatility is definitely there. So it takes a lot of discipline and a lot of just understanding and being there present all the time, which is part of what like the reason where I'm like just to like put on like give you some insight of like why I thought that was funny because I'm like, well, I haven't been doing really good with my trading recently, and I'm like, well, why is that? I'm like, well, a lot of the days where I've been like down or whatever, it's like just because I'm not there mentally. It's because maybe I went out drinking the night before, or this, and like, and then now I'm like kind of I'm not there, so I'm just. It's just like it's like playing poker when you fucking hungover,
Yeah.
right? It's like sure you could win, but like the chances of you winning now have gone significantly down because your presence of mind, your ability to read something, to pick up on that one thing is greatly diminished. So yeah, so like for me personally, like recently, I'm like, hey, I'm gonna be way more managed about like my bets. I'd be way more decisive in terms, or I'm gonna study way more about my decisions, be way more sure about them, and like be on top of them, and not fucking go out Sunday nights and whatever, and then wake up Monday like fucking like a shit faced, and then same thing with like Wednesdays or Thursdays. So like so for me, I'm trying to take a step back of like all the drinking and what a partying and this shit and I don't know, just
I
kind of
think it's
take
a great idea. I think it's a great idea.
that slice of humble pie that life has served me,
Yeah.
and go from there.
I think
And
it's a
then
great
because
idea.
I do think that like it is something now that I definitely better understand, and if my discipline is there and I do things a certain way day after day after day, like these small days they will stack up, and the performance will be there.
So I'll tell you that there was one factor that actually got me interested in this, or there was one thing I heard, and this was from a guy that was a former poker player, who's now like he's been trying to grow his brand, and he
Yeah.
he transitioned from poker to prop trading about like 10 years ago or 8 years ago or so. And he's just started a podcast recently, and he was on another podcast that I follow, and the way that he explained it, the analogy he gave, he was like, if you can get good at options trading, it's not like poker where like if you're like if you have a good strategy for like 5 cent 10 cent, you can't use that same strategy at 200 400
Yeah.
because they have better strategies. They're playing closer to like a computer and
Yeah.
and so on, and they're better players. But he was like, the analogy that he said, the analogy he would use is, if you can figure out at like small stakes with like anything, and derive an edge, you can then you could take that same strategy that works
scale.
at the small stakes and use it
Yeah.
at like 200 400.
Yeah.
And that is like, and since I think he's made like over 8 figures, and he actually just had I think it was your old friend, I don't know if you're still your friend, or like the guy that you had mentioned, he had him on for an episode. And
Oh, you're talking about
Jack, is it Jack?
Jack?
Yes.
Jack Harley from Blockworks.
Yes. Well, I don't know where he's from, but I saw that he was on this guy's podcast that I follow, and I'll send you the link to it or whatever afterwards. But that was just that like piqued my interest. And then the guy on YouTube, I forget his Clear Value Tax. Then he put out an episode, like a 50-minute episode on like the basics of options trading.
Yeah.
And I watched it and I was like, okay, you know what? I actually think I have a grip on it. But now it's like I still haven't made a trade or like bought an options contract. But I am interested in trying to learn, because I think
again, and I think so like there's two ways that you could get started, right? You could do like you could do all the studying you can and fucking study for like the next like 2 months, and then like maybe one day decide to like pull the trigger, or you could just pull a trigger right now and just kind of like, so let's do it live. Which what option do we have? Well,
The thing,
the market's not open, so
so the thing is, like, for the what I was thinking of doing is, and what it seems like this guy does, and he focuses on, I think, like oil, energy, and stuff like that. So
yeah,
picking like some sort of like industry or sector, and like, and the thing is, like, I don't even know, like what what I'm looking for, or what's a good price or not, or like who I'm really like
yeah,
trading against and stuff like that. So it's like
yeah.
kind of scary.
So that's the thing that, and like again, and that's why
What did you start with? Like, what was your first options contract that you bought?
I think I was probably like buying and selling. So like I think when it comes to the markets, I think people go through like these stages when they start like understanding the markets, whatever. And I think it's like people come to the markets. I think maybe because um, I don't know, maybe they come from crypto or whatever it is. Like people come to
Mhm.
markets for like a bunch of different reasons.
Oh
But
my
I
gosh,
feel
hold on. We got
like
we got a comment from Dave over here. Don't worry, folks. If you're as confused as I am, just remember, buy low, sell high, and if all else
yeah,
fails, blame the economy, order pizza. Thank you, Dave.
yeah. But I think a lot of people come to the market, and it's the same as me from like a very bearish perspective of like, the US debt is so high, and like all these like reasons, like this bearish tilt, like they see movies like The Big Short,
Mhm,
and they see why how things are so expensive, and like, oh, this can't go on, the economy has to crash and all this stuff, and it kind of like, you know it makes people like want to buy put options and stuff like that. So I think for me, when I started, it was like probably like 2018, 2019, and I was like just constantly like trying to short the market with puts,
yeah.
probably just like bleeding away money, and I was uh, without really understanding, like technical analysis, and really that like really understanding like the underlying aspects of markets, which is like, oh my god, what is this dog complaining about? The underlying aspects of markets, like what really moves, like the liquidity that moves the markets, right? And I think just over time, studying and listening and just kind of like getting things going, I kind of just got the sense that there has to be a bullish tilt on the market. That like just by the amount of money, like every time that that you are working, your paycheck, they had 401k, and that 401k has to go and like actually buy stocks and things like that.
Mhm.
What is this fucking dog complaining about? But yeah, so I so I do think that once people like kind of break out of that like bearish doomsday porn stuff that's all over YouTube, like, oh, like housing market, it's beginning, like the crash year, and every thumbnail has the fire background of Jay Powell and whatever, and everyone just kind of wants to see the market like start to fail.
Mhm.
But
Well, people have
the
been calling it forever, so
the reality is that even if we have moments like 2020, and I remember buying I bought the UVXY, and that's the volatility index in March of 2020, and I bought it at like I think like $25. I sold it at like 70 something dollars, and it went up to like $800 in the span of like 3 days. So
uh-huh.
I would have made like just like $1 million just off that bet, and I sold it way early. Uh,
But can you learn, like, when that happened, were you able to
yeah,
learn
so
from that?
like, dude, yeah, you have to, and like, and I think like, what is this? Hold on one second. There you go. Stupid toy stuck in the couch. Uh, yeah, I mean, from everything, like every mistake you have to learn from. And again, like I definitely did not have a good year, and it's because I think I just got way too comfortable and cocky with
Did you win like 10 times
risk
in a row,
how I
like a
made my
bunch of
money.
times in a row, or was
I
it
think
that, or like overconfidence, or was it like more of a like you couldn't do anything
I
wrong
think
at the
it's
time?
overconfidence
Yeah.
and a lack of discipline and just things like that. I think, and then and it really can get like poker where you start to tilt, right?
Yeah.
And you
Yeah.
start to make wrong bets to, and then things compound, and it could take a bad turn.
The guy said the
And
exact same thing. Yeah.
yeah, so understanding your emotions, understanding uh, you know, the proper sizing and the proper things, and making correct decisions. And I was reading this part of the book, "The Obstacle Is the Way," and one of the first like parts, it was like it was about uh, John D. Rockefeller.
Hmm.
And it was like this one part is like the market is inherently unpredictable and often vicious. Only rational and disciplined mind could hope to profit from it. Speculation led to disaster. So, like, what's the difference between speculation and an informed decision, right? Like, information, studying, like, actually understanding. Like, if you just look at the chart and you're like, yeah, I think it's going to go up, and then just like, you're speculating, it's going to lead to disaster.
I mean, you're
But if you
gambling. Yeah. It
really
sounds
take
like.
like, if you really like, just like this guy, he chooses one or two industries,
Mhm.
and he's like, I'm going to know everything about this. I'm going to look at the charts. I'm going to read the news. I'm going to do whatever it is. Then he has an edge. He's not,
Yeah.
I don't think he's, in a sense, it's speculation, but it's informed speculation. That's
Mhm.
way better than what most people do. And like, someone like Tarun, he is definitely more speculating. He's kind of just looking at the charts and not really.
Well, he's also like he's brand new to it too. He told me he started like 5 months ago. So.
Yeah, and he's doing like very short-term stuff.
Mhm.
Whereas, yeah, I do some short-term stuff, but I'm spreading out the risk with increasing the time value, right? So when you buy an option, like the time decay is a huge part of it, right? So you're not only betting on the price, but you're also betting on the time. Oh my god, this fucking dog every time.
Dude, every time you hit record, he knows.
Every time he knows. He knows. Yeah, it's just like it's the shorter dated options, which is what everyone does right now. It's extremely risky. Like you're buying something that you're buying, like people do same day expiries. Like they'll
Yeah, yeah.
basically like, and these have major swings, like major swings. So
Yeah, I saw some
it,
I've been getting videos on that, like people that do like the same day short term like things, options. I think
yeah,
because
it's basically day trading, but with more with an hey, stop, no. Oh my god.
I'm sorry, it's kind of funny actually. It's like
he's
every time we've done it.
every time.
All right, so
Yeah.
where would you recommend like a big look? Let's say I pick, you know what, I want to learn, I'm gonna study and like focus on energy. Let's say that's what it is. Like what what tools or
Um,
resources do you think like
I think
someone should use to decide like what they're
I
gonna
think you have
buy?
to also like you kind of have to like enjoy what you're
Yes, yeah,
getting
yeah,
into.
yeah.
So I don't know if you're gonna be really like enjoy studying like energy markets and OPEC and whatever it is.
Uh-huh.
Uh, but I do think that you're going to maybe like tech or Apple or
Yeah.
those maybe you'll enjoy those.
Yeah,
Uh,
yeah. I see what you mean with
so
that. I'll be more
yeah, I would
motivated to
probably
like
start
study that.
there. Like I would say, pick like obviously you have like the triple Qs, like the that's like the NASDAQ.
Mhm.
stocks, the tech stocks. That's the index. And then you have then pick like maybe 3, 4 stocks that are heavily traded.
Mhm.
Because the thing about options trading, like I do some like trades with like I would say like the smaller cap names, like say like a Wayfair, which has, it's not a tiny company, but it's a $5 billion company
Okay.
compared to 200, 300 trillion dollar company like or $2 trillion company like Apple. Uh, so their option pricing, the prices of those options are going to be more volatile compared to an Apple, which has more interest. There, it's like anything. It's like every option is basically has an order book, buys and sells, people trying to buy a certain price, and sometimes with lesser known names, the spreads on the bid and the ask could
Mhm.
be 20% literally, because you have somebody asking uh for 40 cents to buy, and someone asking for 50 cents to sell. So
Mhm.
that's legitimately a 20,
Yeah.
20-cent difference. So, but sometimes with those smaller stocks, they can move very fast. So it's there's a lot to it, but I think just the more that you do it, the more comfortable, I guess, you you'll understand. And again, like it is marrying two disciplines, because you have to understand the math and all that stuff behind the options part of it, but you also have to understand the technical and fundamental analysis of whatever you're doing, right?
Of
And
the
kind of
company and stuff.
yeah, and then like also look at the charts, and then you also have to like kind of understand where the whole market is going as a whole. So it does take a lot, and that's what consumes a lot of my days. But for me, my goal is to like get back on track and start making actually like smarter bets for me. I don't know.
Hmm. What do you think about something like this, where like let's say, because the prices of the options, are they just like they're just determined by the market, like they're not being set by like a Robinhood, it's just the market, like whoever's willing
Well,
to sell,
yeah,
and
it's the
they
market, but there are the market makers, and like there's so many. Obviously, there's so much big money in this stuff that like,
because like
I mean, like the price is the price, and then like so, but when when market uncertainty comes, right? Like you've had the last several weeks, right? The market's kind of like going down. That means you're going to get more interest in protection, right? So say the market's going down, people are like, we need to protect ourselves in case, say we own $10 million worth of Apple, like we need to protect ourselves in case Apple goes down 10%. Let's buy a put option, and basically that's the premium to like get a little bit of protection, right? And so you'll have more people doing that, which increases the price of the option. So
Mhm.
sometimes, like you can get if and that's basically the volatility of the VIX.
Mhm.
Uh, that's the implied volatility. So if oh my god, it's fucking dark. If more people are interested, then the prices are basically going to go up, right? That means there's more of an expectation of a bigger move.
Mhm.
So
I
sometimes what happens is that prices, like say like leading up to Tesla's earnings, right?
Yeah, yeah.
No matter what, like sometimes you could like probably buy the option the week before, and no matter what, which way the price goes, you could probably sell it right before earnings, because more people are, what I'm saying?
Yeah.
The more people are going to want those things right before earnings, because everyone's thinking, let me get options right before earnings. I know Tesla's going to kill it, bro. He's so savage.
So I was
Did you
thinking,
see what he did to Wikipedia, bro?
yeah, offering $1 billion.
Wikipedia, bro.
I mean, they should
It's
call
so
that bluff. They should
savage.
call that bluff. They should call that
It's
bluff.
so savage.
But so I was thinking maybe like let's say I focused on Tesla and like looked at the 30-day strike, the price, the premiums for 30 days and just seeing what they were doing. And then
Yeah,
maybe like 30 days later looking back and seeing like for each day, like if I'm looking back always 30 days before, like what is it that I could have been like, first of all, would I have like made money or lost, or the option would have expired, or like I'm trying to think of like how to approach like figuring out how like different pieces of news affect the price like a month later, or how like looking back what I could have seen, or what I could have like caught, or what like let's say the I don't know if it's yeah, I guess the premiums would be the ones that would be changing, like fluctuating
yeah,
like crazy if if there's a lot of buyers or sellers or whatever. So like let's say the premiums are like 40 cents for an option for like the entire month, and then from one day to the next it goes from like 40 cents to 80 cents, and I'm just
mhm.
like what would like maybe trying to understand what caused something like that, and how fast do you have to catch that to like realize, you know I don't know. There's
Yeah,
just a lot to it, and maybe like focusing on one company that I
yeah,
might be
yeah,
more interested in is the way to start.
yeah.
And
And
then
Tesla is one of, if not probably the largest like options traded, because you have people that are young people that are interested in it, and it's basically like the largest meme stock in the world that we've ever
mhm.
had, right? So it's just, forget about the underlying. It's just people love to speculate on Tesla. That's just the reality. And like no matter what, even if you like, even if you think the underlyings of the company aren't that great or it's not that valuable, it doesn't matter. Like, so there's going to be so many people. There's going to be so many people interested in buying it and trading it, and it's just
Yeah.
that's just how it's going to be for a long time. So I think we're probably like in Tesla, where I mean, I don't know if we ever break those highs of $400 or whatever, but we're probably going to be in like a massive like 3 to 4 year distribution phase of you know those stocks just changing hands until someone becomes bag holders in like 2027, 2028. And I think, I don't know, that's how I view it. But
So you have like some sort of narrative that will drive
the,
whether or not you.
yeah, either up or down, but that's probably going to resolve itself in a long time. I mean, the run that it had from late 2019 to 21, that's a huge unprecedented move. That's, was it 35x or whatever it was? It was like
Yeah, I don't know, but it
ridiculous.
was a lot.
So
But
yeah,
that's the other thing about options that's interesting to me, in that like you have leverage when you like buy a call option, right? So
yeah,
instead of just buying
oh,
like the underlying stock and like hoping it doubles in price, for a
yeah,
small amount,
yeah,
and like
yeah.
maybe if I
It's
can
a leverage
estimate
play.
like, yeah.
Yeah, I mean,
So
exactly. But it's leverage to the degree that you could only lose your premium, right? You could only lose your premium at a time. And then you could have different exit strategies, like, but say something like, say if you bought Nvidia calls in, sometime in March, like they were like 3 months out,
mhm,
and it starts going deep in the money, and now it's like 20, 30x or 40x or whatever it is.
yeah.
This stories of like 100x, do you let it run? Do you have, those are all like, do you take half off the table and let it run? So like those are all different things that different people have different strategies for. So like some people like, they're like, hey, if I double my money, I'm out, I'm happy. And like that's it, live to fight the next trade. Some people will let it run. Some people will be like, some people will have stop losses and on their options, and that could be, like sometimes, like most of the time, the the trade will go against you for like a few days, and then it'll go into your direction. You're never really picking exact times, but if you have a good framework, and then so go to the website. Actually, let me
You want to share your screen?
share this.
Yeah.
Share screen. Present. Share screen. I'm going to do this time. Share. There we go. So
It's bigger.
So I go to Wayfair, right? This is Wayfair, and
Their symbol's W. Just
actually,
W?
yeah, it's just W.
Wow.
Let's do Apple. Got it?
Okay.
Is it double A? No, it's double A, right?
Maybe it's double A PL. Yeah.
I do.
There it is. Yep.
Right. So I get the price right here. So and then now I'm going to select an option. So say the next one is the weekly, which is every week they have an option, right? Option expiry. So we have the 27th.
You could buy them right now, by the way, like even though the market's closed.
No.
Oh, this would be at open.
This is the prices as of closing, basically.
Okay. Gotcha.
So let's say we're gonna bet for the end of this week.
What's
It's
the end of
at
this week?
172.86 currently.
Gotcha. Yeah.
So the options are $2.50 intervals, right?
Mm-hmm.
So the next in out of the money call is 175. Let's say we could get it. We think 177.50, right? So 37 is the middle price. Say let's get. Let's.
Wait, what do you mean the middle price? Isn't that the price per?
You have the bid and the ask, right? So the bid is 35, the ask is 38. So
for the premium, okay.
Yeah, for the premium.
Gotcha. 37 for the premium. So 37 cents times 100.
Well, realistically, you have to buy from the ask, right? So it's going to be 38.
Okay.
Let's buy 100 of those. It's going to be $3,000, whatever, for 3,800, plus whatever fee that which depending on whatever website you use, it's usually about like 50 to $60.
All right. So time out. How much of your bankroll would you risk on a trade like this? If you're gonna
it depends on your confidence, and it depends how risky the thing is, right? So like this, probably not that much because this is a very short dated option.
Mm-hmm.
So
you're thinking that it's probably going to expire worthless.
I mean, you also have 4 days to assess that, right? So you have all of trading day Tuesday, Wednesday, Thursday, and Friday. You have 4 trading days to assess it, see how your trade's doing. And so let's calculate this, right? So this is options profit calculator. So right now it's at 172.50. So let's do a price from 171. Let's go up to 185 potential.
Mm-hmm.
So calculating is going to come up with this chart. So this is today. So that's already gone. So it tells you your break-even price for every day. So it's about, so tomorrow it'd have to get up to around 174. The next day around 174.50. The next day 176. And then Thursday 177.50. And then what do we get? 177.50, right? Yeah. So 177.50 plus the 30 cent strike price. So closer to 138. I mean 178 is your basically break-even price. Now for every 30 cents that it goes up, basically for every 38 cents that goes up, you're gonna add whatever that $3,800. Wait, is that right? Am I saying that right? I think so.
Sure. I'm not sure. I haven't seen this, but yeah, this is doing the calculation for you for like where.
Yeah.
At what point.
So if it gets up to 185,
mm-hmm.
you're gonna make $71,000, and the most you could ever lose is the
3,800. Yeah.
Yeah.
So then you can figure out maybe like what percentage of the time that has to be right.
Yeah, and
I don't know how people would calculate that, but
so
also
like
what you would
if you
need
think
to.
I mean, maybe you don't think it's going to get up there, but maybe you think the next day alone, right? The next day alone, Apple is going to perform well, right? So you buy the same call, and the next day, maybe because they had maybe there's like 3 down days in a row, and you just know there has to be a bounce. So you buy that, and it gets up to like 176, and then at that point you could sell, realize the $6,000 profit,
Mm-hmm.
and then forget about the trade. Your goal wasn't to go to expiry. Your goal might never be to go to expiry.
Once
Your
you're in the
goal is-
money,
Your goal is basically to get that leveraged bet with a defined risk,
mm-hmm.
and if it hits that target the next day of 176, then you could sell, and you never really had a belief that it was going to make it up to 178 by the end of the week. You know what I mean?
Okay, I see. So you wouldn't exercise the option, you would sell the option? Is that what you're saying?
Yes. So basically, now you have the option cost. Now you would basically sell the same contract to break even. Yeah. You
Okay.
sell off what you have, because now somebody else is willing to pay more for it.
Yeah.
So yeah, I mean, like, again, I think most of the time it's better not to let it go to expiry unless you're just very well in the money and very comfortable.
Mm-hmm.
You know what I mean?
And maybe at that point, like if it did like moon, and then you might like have like a stop, like if it goes down like 10% from where it's at or something like.
Yeah, but like these, it could go 10% real quick. Like, and it
No, I'm saying that like
likely-
you're up 60% or something, and that's going to be a
And-
huge amount of money. Like it's going to be
yeah, I mean, if you
insane.
have a huge amount of money, but like up 60%, if you're up 60%, and that's your goal for then I'm not sure if that's, unless you have a strategy which for very longer dated options, which 60% is a big move for that option. You know what I mean? Because say
Mhm.
like now, if you do something like this, let's do a much longer dated option. Let's do
Well, what I
February,
meant was like
March.
let's say you did the week here on Apple, and you're hoping to make, it's at what was it, like 172, and you're hoping it goes to like 180 or so. But then
Mhm.
tomorrow or 2 days later, they announce that they're going to do the Apple car, and it's ready to launch like in 2 weeks, and then
Yeah,
it just
and then it just flies
explodes.
up. Yeah.
Yeah, and then maybe, let's say it goes to like 290, and then you're like, okay, if it drops down to 270, that's when I'm like, exercising the contract. And
Well, you're not. No, you're selling.
wouldn't you be exercising it if you're in the money? And then am I using the wrong language, the wrong terminology?
I mean, yeah. I mean, you're not exercising it because it's not at expiry. You're basically just selling and realizing the profit.
Oh, you could only exercise at expiry. That's when that happens, like
Yeah,
automatically.
I believe so. Yeah, I think that's how it works. You can only exercise at expiry, and why? But again, why would you want to take possession of that stock? You want the profit. You want the money. Unless, I mean, and then with that money, you could go and purchase the stock if you really want to.
No. I'm just trying to understand this this much
So let's go to a longer dated option.
for Apple.
April 19th of 2024. This is what is 6 months out?
That's like
And now we're gonna
halving. That's like the Bitcoin halving.
halving. So now we're gonna buy a 190, and we're gonna buy not 100. We're gonna buy.
Just say like suppose you were doing like 5 or 10. Yeah, 10 is probably more realistic, right? Oh wow,
And now,
because it's 675 an option.
yeah. So for every option, you're gonna spend $675.
Yeah.
But now this is like way more understandable. Okay, so with something that's way longer dated like this, now it's very reasonable. Just let me go to Apple's chart. Let's see. What the fuck is this shit? Apple, 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 Apple. There you are. Oh my god, I fucking hate computers. So Apple was at what do we buy? The 190s?
Well, we said it was 172. It's 172. Oh yeah, we bought 190. The 190
190s.
strike.
So Apple was at 190 basically at the end of August.
Okay.
So it's really that's a 10%, about a 10% move from this point. Really not like it could do that in like a week or two, right?
Mhm.
So say if it gets there, right? So we're at 172, and let's say by mid-November, end of November, by November 22nd, it's at 190. Where is this? November 22nd,
Yeah,
190.50. That's 100% return at that point, right? So that at that point, with a longer dated option, maybe that makes sense to take that 100% profit.
Yeah.
It's way less risky, I guess. You know what I'm saying? Like it's way. If this was a shorter dated thing on the same type of like move,
You would let it go?
that 5,000 could turn into like, 90,000, like
Mhm.
how we showed before. So, yeah.
All right. Well,
So that's the basics of options. Yeah.
I like this. I think it's interesting. I actually kind of like the idea of the covered calls, like being on the other side and
And
like
just
owning the
selling.
stock,
Yeah.
putting like I don't
So
know, but I don't know if I would like that one because, well, actually maybe because if
well, it
you
depends. Yeah, there's a lot of stocks that like people just they like say like if I did a Tesla, let me see. Let me show you. I'm like,
you also don't
how
have
do
to
I
show your numbers if you don't want because like that's
no, I'm
like
not showing
who
my
knows.
numbers.
Okay.
I'm trying to see how I say stop sharing. Let me present. Okay. A window and share. No, let me just show.
For that example, I think I like the idea of owning the Apple stock, like limiting my upside if it does shoot to 190 or whatever by April, but just collecting that premium just seems like so attractive. And even if
Yeah.
you
So
lose, even if it like, does get executed, you're still up. You're still up on both. on
oh, we got so unorganized this thing. Be more organized.
Can
Tesla. I don't.
you type it in?
Yeah, I guess so. I'll do that.
There it is.
So there's a trend line here that's like it's going to be extremely hard for Tesla to break, right?
Mhm.
So if you have like 281, if you're selling 281 calls, it's pretty safe, right? Like right now, if we
How much?
it's
What's the price? What would you put a charge in that premium? Like, but
it's
it would be probably
probably
low.
very cheap,
Yeah, probably very low.
but let's say November 17th, 280, 30 cents. So yeah, I mean you're making $300 a contract. So
Mhm.
you can probably sell like if you sell 100 of them,
And
you
even
make
if
3,000
Tesla
too.
moons, even if Tesla like jumps up, like you get your
It would
two.
have to really like start like jumping up and then and then start breaking out of this trend line, but for you to get scared. I
Yeah.
mean, but like, that's kind of like the balls of steel that you have to have because the problem is with when you write calls, like yeah, you can print money, but
Uh-huh.
if it does go against you, you better have a fucking strategy because it's basically unlimited losses. Like if Tesla does double, which at this point is highly unlikely because it's such a large that's like Apple
Yeah, yeah. They're just so big that
is
it
so
wouldn't even
big
make
for anybody.
sense.
Yeah.
Yeah.
But uh
But who knows? Like, maybe Elon's robotaxi is ready.
Yeah, maybe. And
Something
maybe
like that.
my
Something
dick
like that
is
could
covered in gold. But
yeah, your dick's making it made of gold, you said.
but it can, like, it can get very ugly. Like, you basically, like, if you basically say, like, when Tesla started going parabolic in 2019, I'm sure there were people that, like, were selling calls against it, and then it just went parabolic, and they're like, what? They probably owed like a lot of fucking money.
But I mean, I think with Tesla at this where Tesla's at right now, how could it go parabolic? It's just the company's worth
No,
like,
exactly.
yeah,
So I mean, that's part of making that type of informed decision.
yeah,
Back in
yeah,
the day when it was like 30 to 40, like a 20 billion dollar company, $25 billion company.
yeah.
Yeah.
Where
I
it had
mean,
room to run.
and then people were like, like, I remember, like, the guy from The Big Short. He's like, yeah, I'm sure Tesla is. I really don't, but I think they might go bankrupt soon. And they were close.
Yeah, yeah.
They were close. But Elon's the master of
Marketer,
the
social media
master
guy.
master social media guy.
Yeah,
And the pandemic fucking did them wonders.
yeah.
So yeah, it's crazy. And now, like, yeah, the shorting something like that, I just realized you never want to step in front of, like, you never want to short anything that has any sort of following.
Mhm.
It's a death wish. It's a fucking death wish. Yeah.
All right. Well, because I love Wayfair, maybe I'll
Well,
start researching Wayfair.
yeah,
I'm joking. I'm joking. Maybe like I'm not interested in Wayfair. I know
I'll
Teresa
share,
loves
like,
it.
I could share with you, like, from now on, like, all the things that I do.
Well, like what are you interested? Which companies are you like
Right
studying or
now,
interested in? Or
I'm kind of looking at bonds, actually.
okay,
I'm looking at basically, I think bonds might be in, like, a topping pattern. So the TLT, which is the 20-year Treasury bond ETF, has been just, like, on a nosedive. And I think now that, like, inflation's kind of, like, moderating, and then I think what Jay Powell speaks next week, and I think every time for, like, the last, like, 5-6 months, it's always been, like, hawkish, hawkish, hawkish. Now that you have, like, the different wars breaking out, and I think we're gonna be more of a dovish tone, and I think that's just gonna be a much needed bounce for yields to, like, come down, and for bond prices to go up. That's how I view it.
so that's what you're paying
So
attention to.
that's what I'm paying attention to. I haven't made that bet yet, but I'm planning to make that bet maybe towards the end of this week, maybe Thursday or Friday.
All right.
And so I'm gonna spend the week kind of, like, digesting what's happening, and to figure out a good strike price, and then go in, and it's just like poker. It's just like taking the information. What's a good bet size? Okay, this is showing me this. All in, baby.
Do you do it as like a percentage of your like the bankroll that you're using? Or you like at most I'll risk like 4% on this trade on this bet, and I think I have like an X% chance of like
Yeah, I mean,
winning or
yeah, and, like, if it's a longer dated option, I could go pretty hard with my bankroll, because it's not that's how I view it, because it's not as risky. Going back to, like, that other example uh with Apple, whatever, when it's longer dated.
Mhm.
If it goes down, it can go down, like, yeah, 10, 20, 30%. But that's really not as bad as going down, like, 60% in a day, whatever. So
is it known publicly like what like maybe here's a couple questions. Is it known like what percentage of because like is it known like what percentage of options traders or people that are like buying, selling, or doing this stuff, what percentage of them are like profiting over like the long term? Or because
no,
in poker it's like less than 10%, maybe like 5% are like able to profit with the rig.
yeah,
And
Yeah,
And
I
with
would
the
think so.
skill, you think it's
Yeah,
around,
because
you think options is around 5%, 5-10% also?
maybe less because you think
That's
about like
insane.
how many people are buying options on their phone on Robinhood, like during work or whatever. Like
That's insane.
people do that. A
If you
lot of
think
people
it's
do.
5% people, percent of people are profitable, like,
Well, you're
or have an
talking about a
edge.
pool. You're talking about it's not. It's not the same thing, right? So it's like when you say poker players, what do you mean? Because
What is this?
Teresa has played poker before. Is she not a poker player?
Well, I would say
Has
someone.
Teresa played a money tournament before?
I don't think so. So
Has she played anything for actual money?
I would. Okay, so let's just focus specifically on cash games. If we're talking about cash games, I think maybe maybe tops 10% of people, and I can tell you why.
But what I'm saying is, are you including the casual player that has played any cash games as part of that
The
big pool
entire
of
pool,
people?
the entire pool.
Yeah, of
You
course it's
take the
going to be
entire
small
pool. I
because
think it's
there's so many people that aren't putting their full attention to it. So of course it's going to be small. It's the same thing.
so you
So,
think it's the
but I
same
would
in
say
options.
if you for the people, they're really. I think it's. I would say put it this way: if you do the hard work, I really think the chances, and you make like logical decisions and you stick to a set of rules, which
Mhm.
is what I haven't been doing, what I plan to do now. But like if you do that, I think your chances of profitability are probably like 99%
That's insane.
because because you but you have to be willing to do the actual underlying stuff and do it every day and not deviate from the rules. Because if you once you deviate from the rules, it's just like poker. Yeah, you could win consistently for a year and then just have that one bad month. You
Yeah.
know what I mean? That one bad month where you just total all those rules went out the window. You got fucking cocky, did that, and then now you're back to where you started. You know?
Yeah, it's funny actually because this guy that I was telling you about that I've been following, it seems like this past month or a couple few months have been like that, and you know, I I don't know enough to know why or whatever, but like I'm sure he's
Yeah, I
like
mean,
doubting himself, doubting his strategy, doubting his, having no confidence or whatever. It's like the same ideas.
yeah, and I think that's when you have to kind of like you have to take a step back and be like, okay, when you don't feel confident, don't fucking trade. You know
Yeah.
what I mean? It's like if you don't if you don't feel confident playing poker, if you're showing up to the table like fucking losing, I'm gonna lose again. You're like, you get that fucking feeling. You know that feeling that you're like, and then you're just like all in, and then you trying to be like the man, and you get fucked in the ass.
Yeah. Yeah.
Yeah, it's the same thing. It's the same concepts. So yeah, I mean, let's do it, Jorge. Let's go. Options, bro.
Well, I'm interested.
Wait, so I have a question. All right, all
Yeah.
right, enough with options because we're at an hour.
Yeah, we are at an hour.
What what's up with what are you and Dave working on?
Okay. So I don't know if I don't even think Dave would care if I was talking about. He's not on anymore, but I don't think he would care even if I was talking about it because
Because
um
there's nobody watching.
yeah, well, one, because there's no one watching, and two, because Dave is of the mindset that, or he once heard someone say that, you could walk down Broadway like yelling out your idea,
Oh
and
yeah,
no one's gonna steal it. So, and
because
like,
nobody's gonna actually do the work to do it.
yeah, and no one cares and whatever.
Yeah.
So do you know what Dave's latest idea or latest business is?
No.
Okay, so in the beginning of this year, he created basically a bot, an AI bot that can handle phone calls. And so he's created a system for small businesses to be able to take calls 24/7 and answer questions from potential customers and all that stuff. So he made that. He's gotten like I've actually been kind of like, very surprised and blown away by how many like people have tried out the service and how
Hmm.
many are kind of paying. Um, but the thing is, so what happened was he's gotten to a point where he can't he can't do extra stuff for specific companies that are requesting it. So like let's say, because he's just a one man show right now and has been for a few months, there are some companies that are like, "Hey, like we want you to build this or we want you to, go further with that." And because of the way that he did his pricing model, he kind of he doesn't have the time to do that. He would need to
Yeah.
charge people to do that. So what he was saying is that I should start a uh, initially he was saying that I should start like a separate like shoot off of his company, and then he would throw the clients that want to do like a bigger project separately. And
Okay.
then the other day when we were talking, I was like, I think it would just be a better idea to keep the same brand because people are finding it,
Yeah.
uh, and to just have like a custom option or custom plan where like, you know, right now on this page you can see like the three options, like the basic tier, the middle tier, the higher tier. Just remove the higher tier and just have like a custom thing, because he has had like I think 5 requests where companies were like small businesses were like, we want to create something that's much more robust and can go deeper and had other ideas, but they just they would need to pay for it because he's essentially kind of like almost like working for free at this point, because like the lowest tier is like $50, and they could like ask him to do something every day basically that requires like 10 to 30 minutes of work, and he's going crazy right now by himself.
Yeah. So
So
he's yeah. See, I mean, Dave is extremely intelligent,
yeah.
but like some of those like time management and like business things, like yeah, that's not sustainable, and he knows
Yeah.
that.
I
But
think he's also stretched himself a little thin with like also,
yeah,
his other businesses, the two
yeah,
actually two other ones. Yeah. So so yeah, so that's what we were like talking, discussing, kind of working on. Um yeah. I could say more, but probably like off stream just in case.
yeah, yeah, of course,
Yeah.
yeah,
You want to
interesting.
wrap it up? You think that's good? I learned a lot. I thought it was like it was very informative, and
Yeah,
very interesting to hear like your approach and like how you kind of went about learning it and like what you're, realizing that you've made like a bunch of mistakes or trying to improve your process
yeah. I
for.
think the main thing is to have a fucking process
Yeah.
and to stick to it, because again, like I think it's it's like anything else. It's like you are just pressing a button and waiting, but all of it's still work, because if you don't do all the underlying studying behind it and like understanding the risk to reward of whatever you're gonna do, that's then you're just pressing buttons. You're just
Mhm.
speculating. So yeah. So I'm trying not to be a fucking actually we'll save that topic for next time.
Okay.
We'll save the drinking topic and all that stuff. We can talk about that more next
Oh,
time.
definitely. We could definitely talk about that.
Yeah.
I have thoughts.
All right. Okay.
All
All
right.
right. Sounds good. Till next time. We'll do it. Let's plan it for, let's see, Wednesday I have what's it
Improv.
called?
Improv.
Improv.
Yeah.
Thursday I have kickball
Trivia
at
night.
6.
Oh.
So that's like right in the middle of the day. So we can do either Friday?
Yeah, just reach out. Yeah, reach out and
Yeah, we do Friday. We do Friday. Yeah, you're good Friday. Yeah, you're
okay.
good.
Sure. Well,
Good,
let me
good,
know. Just give me
good.
like 15-minute heads up. All
All right. Till next time.
right, bye.
Adios.